So guys, I'm paper trading. This one NAS100 index. I took an entry here inside the 1 hour order block. So this is the midpoint of the 1 hour order block. So I was able to take an entry in the upper quadrant above the 50%. So I was able to take an entry in the upper quadrant of the 1 hour order block. So the blue line represents sell side. All this is liquidity. So all this is liquidity, and I'm expecting price to take out that liquidity. So let's go to the 15 minutes time frame. So this is the actual trade. Stop loss is here, 304 ticks. So you can see on Monday we opened with a gap. And this line represents the closing and the opening. So this is a gap. This is a midpoint, and we're going to fill that price. This market is going to fill that price, and that's why I was looking for a sell. So this is a false move. This is the Judah swing. So we have like accumulation, manipulation, and we're gonna go down. So this could be like a distribution, and then the market can reverse, so we can have another move up. So the extent at which you can sell is limitless. The extent at which this sell can go, but you can also have resistance in this opening up of the day. Currently, the market is very bearish. You can see the entry in the 15 minutes time frame. We've already taken out the sell side liquidity, so I should be closing two positions. So I should be closing two positions, two contracts. Good. My stops break even, slightly in profits, and then let this be a runner. So the target for my runner is, that's the midpoint of the gap. So I want it to be slightly below the midpoint of the gap. So I'm gonna have it at 50% level of the lower quadrant of the gap. So it's around 152 ticks. So you just divide it by 10. If you're trading on a normal broker, this would be 150 something ticks. Yeah. You can see we have like 152 ticks. This is 152 ticks. So I want to see what price will do in this area. This inefficiency here, and you can see now so I've already closed the major part of my position. My trade is at break even in case the market decides to go up, because it can go up then continue to go down. Scalpers usually catch a price run from a high to a low. So this was an 1 hour order block, and the market took it out aggressively. We traded above it, so we did not respect it. We had there was a gap represented by the two lines, the up and the low, these two black lines. Market traded above it. So let's look at it in the 3 minutes time frame. We did not respect it. Let's check 5. We still did not respect the gap. So now we've had an aggressive move, taken out all this liquidity. So this could be a turning area for the market, but I'm expecting this inefficiency here to hold the price and fire lower, from most likely to the midpoint or to the low. So once the price is at the midpoint, I'll have a very tight stop loss. I'll have a very tight stop loss and let the trade play out until I'm stopped out, either by the take profit or the stop loss. So I was able to secure 150 ticks for the two position. That's the larger part of my trade. Two contracts. Now I'm remaining with only one contract because I initially entered the market with three contracts. The trade is at break even, so this is a risk-free trade. So we have, let me reduce the opacity of this efficiency so that you can see price clearly. Now we have this is an imbalance. Price could tap into it, the midpoint. I wouldn't want to see the price going into the upper area. I'd like to see this upper portion left open. If it's left open, price should fire lower to my take profit. So we had secured, 100 ticks for the two positions. Now for the two contracts, now we have a runner, which is the one contract that is remaining. So whatever happens in the outcome of the trade, the market comes up, still this trade will end up profitably. This inefficiency is still doing a good job holding the price lower. But in case the price use it as a reference point or even tap into the high of the weekly opening gap to this area of interest, that's okay. Let's look at the price in the 2 minutes time frame. Let's see, we have a volume imbalance here. If we were to use the 2 minutes inefficiency, we were supposed to take the low. You can see the open of this candle, the open of and the close of this candle. That's the inefficiency. But we're reading price from the 1 minute time frame. So we're gonna use this 1 minute fair value gap as a reference point. But I would like this to be left open, this inefficiency to be left open, this inefficiency to be used, fire price lower, and stop me out in profits. Beautiful price delivery. Beautiful price delivery. Midpoint. This is the midpoint. So I'd like to see speed to my take profit area. Once we trade to the midpoint, my stop loss will come to this area of interest or even the high. But I would prefer to give the trade some room, so I'd rather have it here. Beautiful, beautiful price delivery. We are the midpoint. Very close. A few ticks to the midpoint. Few ticks. Give me, give me, give me, give me, give me, give me that price run. This is NAS100 index. Good. I'll have my tight stop loss. Good. This could be a turning point. The midpoint could be a turning point to fire price higher. That's the why I've placed a very tight stop loss. So for long-term traders, you can let the trade just play in the run. You can trade the trade. You can let the trade run. You could have just you just needed to have the stop loss at break even. But for me, I'm a scalper. I look for anywhere between 50, based on the market volatility. I look for 30 to 50 if I'm doing high frequency scalping. Ticks. There is an internet disruption back. So if I'm micro scalping, I look for 30 to 50 ticks, and if I'm doing a proper trade, I look for 100 to 150 ticks. At times I get 200 ticks. But this take today, I've had 100 ticks, two positions. This is the runner, the second, the one contract that is remaining. I'm targeting 150 ticks. You can see here, divide by 10. Divide this figure by 10. This because I'm paper trading. If it was an actual broker like Paperstone, drawing this line, this is 90 ticks. So this, if I had entered here, it would read 90 ticks. But since I'm paper trading, that's why I divide this by 10, so that it can be in sync with the actual broker. So we have an inefficiency here. This trade is giving me signatures of lower price movement. It's giving me the signatures for lower price movement. One rule in forex: do not change strategies in between a trade. What do I mean? Do not change a short-term trade to become a long-term trade. If you do that, you're going to lose a lot. There are times you're gonna win big, but most of the time it's gonna go bad. So that's why the objective that you had when I entered into this trade, that's what I'm gonna follow. I have an inefficiency here. So I'd like to see the upper portion of the inefficiency left open and used to fire price lower. If not, this is the high of the opening gap. This is the high. This is the low. Let me increase the thickness. And this is the midpoint. You can tap into it. I wouldn't want to see the market trade above this high to my stop loss. I wouldn't want to see that. This candle so far is respecting the inefficiency. I wanted to see the upper portion left open, but being traded through is okay. As long as it's respected, the bodies are respecting the midpoint. That's also a very, very, very powerful signature. Tap into the high. I like to see it tap into this high, fire lower. I wouldn't want to see the market trade above this green candlestick. Then I'm not willing to hold on this trade for the market to trade into the inefficiency. because you already traded with the midpoint of that inefficiency of the opening gap. Now I want to see how I'm gonna be stopped out in profits. So, and you're gonna learn the importance of taking partials. Internet disruption again. Sorry, that was an internet disruption again. The internet today is not. Actually, it's actually because the on other tabs the internet is working perfectly. So probably it's the just the system. So we quick tap in this inefficiency. We did not trade above this. We didn't want to see the market continue higher. We like to see the market aggressively come lower. In case the market decides to go up to this inefficiency, we'll be stopped out here in profits. 74 ticks in profits. Midpoint of the 2 minutes fair value gap. These three lines represent 2 minutes fair value gap. These lines. It's an old fair value gap. It's an old one. Yeah. Oh, it's not a 2 minutes fair value gap. Which inefficiency is it? Oh yeah, yeah. It's a okay. I'm gonna check. I'm gonna check what inefficiency it is. I'm gonna check what inefficiency it is, but it is an inefficiency. This FIP tool. So I'm excited. Uh, we respected it. Now price is firing lower. I want to see the market going to my take profit. Good. Now we're going to my take profit. Good. Midpoint of it. I have a strong feeling the market is gonna skyrocket lower. We're gonna go lower. Today we might have a very aggressive lower price movement. So midpoint slightly below the midpoint, few ticks to my take profit area, patiently waiting. So right now we 124 ticks in profits. We're looking for 150 ticks in profits. Fill me in. Good. Take profit executed. Such a lovely trade.